Well, Bob, thank you as always for joining us. Let's dive into it and look at the week ahead, shall we? The second week of the month is upcoming. We are used to this being a relatively quiet period in macroeconomics. Is that going to be the case during the upcoming week?
For the US dollar, it's a particularly quiet week ahead. Key stats include JOLTS, job openings, inflation, weekly jobless claims, and consumer sentiment figures. I'd expect some interest in inflation figures, but ultimately it's going to boil down to the weekly jobless claims figures on Thursday. The market's going to need to see a further pullback to sort of 700k levels, and then a pickup in consumer sentiment to support this optimistic outlook towards the economic recovery. For the euro, German industrial production and trade figures for December, and then at the end of the week, Eurozone industrial production figures. Expect Germany's stats to be the key drivers for the euro and the European markets. For the pound, it's a busier week. We've got BRC retail sales figures for January at the start of the week. Markets will be fairly forgiving on that, just because obviously the UK is in lockdown mode through January, so we're not expecting great numbers there. At the end of the week, however, industrial and manufacturing production and fourth quarter GDP numbers will draw plenty of interest, particularly following the disappointing PMI numbers. So those will be key.
Moving on elsewhere, Bob, is it set to be a busy week for Canada, Australia and New Zealand?
For the loonie, it's a particularly quiet week ahead. No stats to consider. That leaves the loonie in the hands of crude oil inventory numbers, the IEA and OPEC monthly report, and OPEC's meeting. Obviously, ultimately, however, it's going to boil down to market risk sentiment and progress towards vaccinations and bringing an end to the global pandemic. For the Aussie dollar, we got consumer confidence and business confidence figures. These are key drivers for the Aussie dollar. Obviously, business investment and consumer spending are key for the economic recovery, so expect these numbers to influence. For the Kiwi dollar, we got inflation expectation numbers at the start of the week. We'll expect some influence there on the Kiwi dollar. At the end of the week, electronic card retail sales and business PMI numbers will also draw interest. Expect the electronic card retail sales figures to have the biggest impact on the Kiwi.
Okay, now moving on to the Asian giants. What about Japan and China, Bob?
For the Chinese yuan, it's a particularly quiet week. Just January inflation figures are due out. Expect some market interest, particularly in the wholesale inflation figures. But other than that, nothing else to consider ahead of the holidays. For the Japanese yen, there's no stats to consider, leaving the Japanese yen in the hands of market risk sentiment and obviously COVID-19 news and chatter from Capitol Hill.
So it looks set to be a relatively quiet week next week. Let's just finish up, Bob. Could you comment more on the latest US politics news and the coronavirus issues currently facing us as well?
On the COVID-19 front, key areas of focus remain vaccination rates and infection rates. Obviously, we need to see vaccination rates continue to outpace infection rates to bring hopes of an end to the pandemic. That then moves on to the focus on supply, which was obviously a key area of focus after woes in Europe and obviously the lack of supply, and that increases the requirement and need for a single dose vaccine. So obviously that's Johnson & Johnson and a number of others that are looking to deliver that. Once we start making progress on the vaccine supply front, we're expecting vaccination rates to really begin to shoot up, and that should support riskier assets and particularly the commodity currencies. On the US political risk front, obviously Joe Biden's 100 days are particularly key from a market perspective. So we're going to need to see a united Democratic Party and Joe Biden delivering firstly on this heavily anticipated $1.9 trillion fiscal stimulus package. Progress there, and obviously the markets should find support for further upside, and we may even see some dollar weakness continue before any recovery.
Amazing. Thank you very much, Bob. As always, a pleasure to speak with you. We look forward to speaking to you again very soon indeed. Take care and goodbye. And thank you everyone for watching. This was The Week Ahead. Don't forget to head over to our Duguscoby TV social media platforms to keep up to date with everything else affecting the markets. Until next time, goodbye.